Can you invest on minimum wage in Canada? Working a minimum wage job in Canada and trying to invest sounds impossible, right? Today, we're tackling whether someone earning minimum wage can realistically start investing despite high rent and grocery bills. In this video, we'll break down real numbers on Canada's minimum wage and average living costs, show you budgeting strategies to free up even a few dollars, introduce simple investment options like easy-to-use apps, ETFs, even a bit on crypto, and warn you about common mistakes to avoid. By the end, you'll see that investing on a tight budget might be more achievable than you think. Reality check: minimum wage versus cost of living. Let's start with the basics. Minimum wage in Canada varies by province. In Ontario, it's currently $17.20 per hour, one of the highest rates, second only to British Columbia at $17.40. That means a full-time minimum wage worker in Ontario earns roughly $35,000 a year before taxes, about $2,900 per month. Sounds okay, but consider the expenses. In big cities like Toronto or Vancouver, a one-bedroom apartment can cost around $2,300 to $2,500 per month. The national average rent for a one-bedroom is about $1,883 per month, which is still a huge chunk of a $2,900 paycheck. Then add groceries. A single person spends around $300 to $400 monthly on food. All in all, an average single person's monthly cost of living is roughly $2,500. Rent, food, transportation, etc. It's no wonder many Canadians feel financially stretched. More than half say they're financially paralyzed by the cost of living, and 48% say they can't maintain their standard of living. So if you're earning minimum wage and feeling the pinch, you're definitely not alone. The gap between income and expenses is tight. But even with this tight gap, there might be ways to squeeze out some savings for investing. How? Let's talk budgeting. Budgeting on a tight income. Budgeting is absolutely key when money is this tight. Start by writing down all your monthly take-home pay and expenses. On minimum wage, let's say your monthly take-home, after tax, might be around approximately $2,300. Now, list essential expenses, needs, like rent, utilities, groceries, transport. These might easily total around 70 to 80% of your income. Next, list wants, dining out, entertainment, maybe 10 to 20%. Finally, what's left for savings or investments could be as small as 5 to 10%. A popular guideline is the 50-30-20 rule. 50% needs, 30% wants, 20% savings. But on minimum wage, you might have to adjust it. Perhaps 60 to 70% needs, 20 to 30% wants, and approximately 10% or less to savings. The exact percentages aren't as important as making a plan for every dollar. Tips: look for ways to trim expenses. Can you find a roommate or cheaper housing to bring that $2,300 rent down to $1,150 each? Can you cook at home more and cut your grocery bill a bit with meal planning or coupons? Even saving $50 a week sounds small, but that's approximately $200 a month you could potentially invest. Automate this process if possible. For example, set up an automatic transfer of $25 to $50 from each paycheck into a savings account or TFSA, tax-free savings account, dedicated to investing. By paying yourself first, treating savings like a bill, you ensure some money gets put aside before you have a chance to spend it. Importantly, build an emergency fund first if you can. Life happens. A $500 car repair or medical bill can wreck your finances if you have no buffer. Sadly, about 1 in 4 Canadians can't cover a $500 emergency expense. Even a small emergency fund, e.g. $1,000, will prevent you from going into high-interest debt when something unexpected occurs. So, before or alongside investing, try to set aside a safety net. Simple investment options, even with small dollars. All right, let's say you've freed up even $50 or $100 a month. How can you start investing that? The good news is, investing has become a lot more accessible for beginners in Canada. Beginner-friendly apps, e.g., Wealthsimple Trade. Wealthsimple is a popular Canadian investing app with zero commission trading and no account minimum. You can start with literally any amount. It even supports fractional shares, meaning if a single stock costs $100, you could buy 1/10 of a share for $10. This is great for minimum wage earners. You don't need thousands of dollars to buy into big companies or ETFs. Similar platforms and online brokerages like Questrade or TD Easy Trade also have low fees or no minimums. For absolute beginners, or those who don't want to pick stocks, Wealthsimple and others offer robo-advisor services where they build a balanced portfolio for you, usually using ETFs for a small fee. You just deposit money and they invest it according to your risk level. ETFs, exchange-traded funds. If you want to DIY a bit, ETFs are a simple way to invest broadly without needing a lot of money or expertise. An ETF is basically a basket of stocks or bonds. For example, there are ETFs that track the entire Canadian stock market or the S&P 500 in the US. When you buy a piece of that ETF, you own a tiny slice of all those companies. This gives you instant diversification. Some ETFs trade for $20, $50, or $100 per unit, but remember, with fractional investing, you could put even $5 into an ETF. Over time, if the market rises, your investment grows. Plus, many ETFs pay dividends, which you can reinvest. They're a great option for set it and forget it investing. Crypto, Bitcoin and others. Many people ask about crypto, so let's address it. Yes, you can invest small amounts in cryptocurrency, and platforms like Wealthsimple even allow crypto trading. But, and this is a big caution, crypto is highly volatile. For instance, Bitcoin shot up to nearly $69,000 at its peak and then plunged below $20,000 by the end of 2022. Imagine investing your hard-earned $500 and seeing it swing wildly. If you're very interested in crypto, consider it high-risk, speculative investing. It should only be a small part of a beginner's portfolio, if any. Think of it like spicy hot sauce. A little bit can add flavor, but too much can burn you, financially speaking. For most minimum wage investors, sticking to more stable investments, like diversified ETFs or savings accounts for short-term goals, is wiser. Cautions and common mistakes. Investing on minimum wage is possible, but there are pitfalls to watch out for. Don't neglect high-interest debt. If you have credit card debt at 20% interest, prioritize paying that off before investing heavily. You're very unlikely to earn 20% consistently in the market, so clearing debt is like a guaranteed return on your money. Avoid get-rich-quick traps. It can be tempting to throw money at whatever stock or crypto is going viral, hoping for a big score. Be careful. Often, by the time you hear the hype, the easy gains are gone or the bubble is about to burst. Steady, consistent investing beats trying to time the market. No emergency fund. As mentioned, not having any rainy day savings is a mistake. Without a cushion, you might be forced to withdraw your investments at a bad time or go into debt when an unexpected bill comes up. Investing money you can't afford to lose. If you think you might need the money in a few months for rent or bills, it shouldn't be in the stock market. Only invest money that can stay invested for a while. Think years, not weeks. This gives it time to grow and ride out any downs and ups. Also, manage expectations. Investing is a long-term game. Even if you can only invest $100 a month, that's fine. Over a few years, with growth and compound interest, it adds up. The key is consistency. As your income grows, maybe you get a raise or a new job later, you can increase contributions. But even now, the habit of saving and investing regularly is more important than the dollar amount. Summary and call to action. To wrap up, yes, you can invest on a minimum wage in Canada, but it requires careful budgeting and realistic expectations. We saw that minimum wage brings in about $35,000 per year in places like Ontario, while living costs can eat up most of that with rent and groceries. The trick is to budget tightly, trim costs where possible, and consistently set aside even a small amount. With modern tools like Wealthsimple, no fees, no minimums, and easy options like ETFs, even $5 or $10 investments are doable. Just remember to avoid the common pitfalls. Build a safety net, don't chase quick wins, and think long term. If you found this breakdown helpful, please like this video and subscribe for more practical financial tips. Are you trying to save or invest on a low income? What's your biggest challenge? We'd love to hear your experiences and tips. Thanks for watching, and see you in the next one.